Hello traders, currently 18th of January, 7:25 in the morning on a Monday. Very interesting week ahead. We have Biden being inaugurated this week, so there should be we expect some volatile moves in the market unless things have already been priced in, so we'll just have to see how things go ahead. This video is analysis on behalf of a company called Traderbook. If you find it adds value or you want further insights into our strategies, including our entry and exit rules, please visit the website. As a warning, this does not constitute financial advice, and you should do your own due diligence and analysis when making investment or trading decisions. This is strictly for educational purposes. So without further ado, let's run through the market for pound against the dollar. On the monthly time frame, we can clearly see prices trading well above this 1.35 area. Potential for further impulse to the upside, looking to test these monthly highs near the 1.4 level. This could be the case, but as there is an inauguration of Joe Biden this week and a $2 trillion stimulus package for America is likely to get approved, there could be somewhat of a consolidation or potential bearish retreat for sterling against the dollar. We're going to see, we'll likely see a rebound in dollar strength as the new president is sworn in, and also as Democrats now hold the presidency and the Senate, which essentially means they can push policies forward with minimum opposition from the Republicans. The trend could start to become bearish over the coming months, coming weeks for sterling against the dollar. I mean, it's been trading in high areas that it hasn't managed to sustain very often. So definitely bearish in the long term, but still somewhat bullish as the trend has not actually changed. Now, if we come down to the weekly, we can very much see that the market has been in consolidation in this area for the last few weeks. We're looking at an area of fair value somewhere between 1.35 and 1.37, failing to break below the 1.345 region, which is essentially where I would be looking to re-enter on the long side. Now, you can see from last week there was recent highs made, but support is still very much holding above this 1.35 area at present, the lowest being 1.345, failing to break below since really the end of December. So now if we come down to the daily, just try to get a bit of a clearer picture on what's going on, we can see that there's still some very bearish formations on the chart forming. Got some strong engulfing candles, but nothing really to push price below these previous highs in this new impulse area. So consolidation is still very much likely. Now, one thing I do want to note is that although the trend is still up, the market is in somewhat of a bearish retreat and consolidation area at the moment. So if you were to looking to re-enter with the trend, very much wait for the market to dip below the 1.35 area unless you have sufficient justification to enter on the long. Now, the trend is still up on the 4 hours, but consolidation is actually showing on the 1 hour chart. So if we just go down to the 1 hour, just get rid of everything for a second, just try and get a clearer picture of what's actually going on, you can actually see that there is still this range of consolidation, and price is not particularly volatile today. There is a holiday in the States, so we'll see if there's going to be any significant movement. If we go down to the lower time frames, there's been very strong bearish entries coming in since Friday. So still very much along from the 1.345 upwards area, stops being quite tight. Current conditions do not deem entry. Market is at a midpoint. And we've got some major catalysts in the form of the presidential inauguration and still Brexit side effects that have yet to be resolved. So still very interesting market to watch. Long for now in terms of, especially if the entry is correct, but still very much looking for a steep sell-off in the coming weeks or months, depending on how long dollar strength remains robust for, or rather, should I say, dollar weakness remains robust for. All right, traders, this is a follow-up video for the NASDAQ 100 on behalf of Traderbook. If you haven't already, please watch the previous analysis. Been right more than wrong, which is always good. Now, let's just start with a monthly overview of this market. So very bullish in the long term in this market. I don't actually look for shorts in this market. purely because it trades against the main direction, and I believe in the companies that actually constitute the stock market index itself, i.e. big tech and some of the healthcare companies. Now, for me, I'd be looking for a good area to re-enter on a long, and that would be close to the monthly lows. So I wouldn't be looking to enter straight away right now, purely because it is quite close to its highs. Now, companies, as already discussed, have very robust revenue streams, customer bases, and to be honest, they have proven to be pandemic proof. In addition, we do have further positive catalyst in the potential for a $2 trillion stimulus package being approved by the Senate in America, which is now actually controlled by the Democrats, which is going to make policies being pushed forward a lot easier. I just want to mention that smart money, i.e. the fund managers in the market, they are probably looking way ahead of coronavirus now and looking at prospects of economic recovery from the vaccination rollout. Hence, this market is still likely to keep impulsing throughout this year. But I am looking for a pullback, and I'm expecting somewhat of a pullback this week because of the Biden inauguration. So on the monthly, we can see that prices retreated from the most recent high, but still market is very bullish in the long term. If we come down to the weekly, we can see that last week was somewhat of a bearish retreat with potential for a further pullback likely as the market has opened at last week's close, i.e. at last week's lows as well. Now it's currently the 18th of January, 8 o'clock, so London has just opened. America will not be trading today because it's MLK Day, Martin Luther King Day. So there could be some further selling off later in the week, which we'll have to check for. We just close this, get out of the way. Now, if we look at the weekly basis, we can already see that it's starting bearish. I'm expecting somewhat of a buyback later in the week after a pullback because of market repositioning prior to Biden's inauguration. Now, if we come down to the daily time frame, we can see that there's been somewhat of consolidation in between kind of, the 12,700 area and the new highs made above 13,100. If we look at this fib, again, just very simple fib, simply drawn on the most recent impulse to the upside, we can see that price is approaching the first level here around the 12,625 mark. Now, it could be a potentially good area to look to enter, but I would wait for further confirmation of my entry rules before looking to buy into the market again. But then if we just get rid of this and we actually look at the 4-hour time frame, we can see, let's just get a bit of a bigger picture, we can see that there has been a retreat from the highs, and there is very much consolidation in an area that was formerly resistance but is now effectively acting as support. Not to mean that price could not retreat to where the monthly lows were, especially as big money decides to reposition themselves this week. Now, for me personally, I only trade this market to the upside. And if you've watched the previous videos, you understand why. The companies that compose the NASDAQ have very robust revenue streams, growing customer bases and subscription revenues, and they're making large net profits and growing net profits on an annual basis, which is very contrary to most companies that, for example, compose stock indexes in Europe, such as those in the FTSE, those in the Euro Stoxx 50. Now, again, if you want more information on strategies, rules, and entry, please do head over to Traderbook and take a look at our mentorship services. And just know that we are offering this service with the full intention of taking you as a novice or beginning trader to a point of conviction and high confidence in making your trading decisions. Consistency in the long term is what we're aiming for all of our students. Now, one thing I do want to just address is some catalysts coming up this week. First being Biden inauguration. So I'm expecting a pullback before looking for a re-entry to the long side. This market, it's difficult to say whether the market's entering bubble territory or not, purely because the companies are quite robust, but I would be keeping my risk very tight. I'll be looking for longs, but I'll be keeping my risk very tight. And when they've moved sufficiently in my favor, I'll be looking to either move my trades to break even and cover, or a small profit, depending on how purposes. Now, in the long term, as the Democrats have taken over the Senate and they obviously hold the presidency in the form of Joe Biden, there are going to be further catalysts that will affect American markets over the coming year. Potential strong fundamental catalysts could be lawsuits against big tech or major regulatory changes to the financial landscape in America, which will lead to steep corrections and sell-offs in the market. So definitely something to be looking at throughout the year ahead, but still very much bullish in this market, keeping my wrist tight, looking to re-enter on a regular basis to the upside. But as always, guys, do not use this video or any videos you see on YouTube to form basis for your trading decisions. Only use them to support or lend ideas to your own analysis and your own due diligence. Okay, because you have to do your own due diligence and analysis before you are looking to enter a trade, so that you have the highest confidence and certainty, and you can let the trade work in the background after which. So yeah, as always, just for educational purposes, I hope it's helped. And if it has, please do head over to Traderbook and take a look at some of the mentorship programs on offer.